Hey guys, welcome back. Okay, so today's topic or lecture is going to be very brief and very important. So you don't want to miss this because most of us are intraday traders and day traders or sometimes scalpers. So when you open your chart in the morning, London session, New York session, whatever it is, what is that thing you want to see? What is those things you want to outline first? Because I've noticed most people just wait till a certain London kill zone or New York kill zone and wait for the break of structure or MSS or whatever and trade without any higher time frame narrative, without any narrative at all. So what I'm going to be teaching here today is what to check out for, so you don't find yourself on the wrong side of the market. Okay, so if you find this video insightful, you can also subscribe, like, and share. If you've been following this video for such a long time and you're not subscribed, that's not the best thing to do. So just hit the subscribe button, like, comment something nice, and it will motivate me to keep doing more of these videos. Okay, so let's dive deep. Okay, so on a new trading day, there are a few things you need to outline and check so you don't be on the wrong side of the market. I said that earlier, and most people get these things wrong because they just mark structures. They don't understand pure narrative and why price does these things. One thing you need to ask yourself is price running to an imbalance, or is it coming from an imbalance? Is price running for liquidity? Is it coming from liquidity? You just want to know all these things, not just go there. You find your time zone, and because sometimes you hit market conditions which are very bad, and those things won't favor you. Okay, so you don't go about blaspheming the course later or the teachings that it doesn't work. Because it doesn't work for you doesn't mean it doesn't work at all. Okay, so you need to study these things, learn these things to the full before you can comment on it. All right, these things can happen in different ways. Constant studying and backtesting will help. Okay, you don't just expect to understand the chart or understand a particular strategy in 2 days of watching just one video, or in 1 week, 1 month. Constant backtesting. I'm showing you footprint as to what to be looking for in the chart. I'm not telling you to 100% copy my strategy. I'm showing you how I trade, and I'm teaching you how to look for these things, so you can go back there, study, and find out your own model out of this. I too studied ICT, found out my own model out of his own teachings. So he gave me the footprint as to what to focus on studying. You get my point? So studying and reading price on a daily basis is essential. Most of you are not consistent with these things. You don't study, you don't read price on a daily basis. Whether you are trading or not, just be there. Just show up on the chart, study these things. Make sure you have a journal. You don't just want to watch these videos as, Netflix video. You want to sit down with your journal, sit down with your chart, and find these things. As I'm pointing them out to you, you're finding them, you're writing them. Any new thing you're hearing from any of the videos you're watching, you want to write them down for future purposes. All right, you have to combine the weekly AMD to this daily price action to get a clear reading. Okay, if you don't understand what AMD is, if this is your first time on this channel, I'll suggest you start from episode 1. So AMD is accumulation, manipulation, and distribution. I think that's the previous lecture I dropped. So if you don't understand the weekly AMD, go back and watch it before you come for this one. So you need to combine that weekly AMD to these things you're checking for intraday setups or day trading setups. Okay, so daily time frame, that's just an abbreviation of time frame, TF. In case you're new to trading, you understand that TF just simply means time frame. So daily time frame, where are we likely heading to? You want to ask yourself these things. You're opening for a new day, right? Yeah, like let's say this is Monday or Tuesday, and you want to ask yourself, where are we likely heading to? Which is the nearest possible draw on liquidity? Draw on liquidities are simply daily imbalance, or daily buy side liquidity, or sell side liquidity. It doesn't need to be daily, hourly also. Any buy side or sell side liquidities you think price will likely run into. That's your drawn liquidity. I talked about liquidities and insight on liquidity. So in case you don't understand, you can go back and study that particular video, that course, so you understand. Now on the 1 hour time frame, that is just a small abbreviation of 1 hour, so you don't get confused. Okay, so on the 1 hour time frame, calibrate the previous week opening price and closing price. Identify the previous week accumulation, manipulation, and distribution fees. You need to put all these things. All these things are like puzzles. You need to align them for you to get a clear reading, for you to know where price is likely running to, so you can join the continuation trade. Continuation. Like I said on the previous video on the weekly AMD, use the 1 hour time frame. Calibrate where the previous week started, like its opening price, and where it closed. Identify the previous week accumulation fees, manipulation fees, and distribution fees. If you don't understand how to do these things, go and I refer you back. I'm referring back to that weekly AMD. Study it. Even if it takes you 3 times or 4 times watching the video, make sure you study it, understand it. You want to do this particular thing for the previous week. Why? Because you want to understand where price is likely heading to. Once you find out the accumulation and the manipulation and distribution fees over the previous week, you get an advantage of knowing where price is likely. I'm not saying 100%, I'm saying likely going to. Combining it with the daily time frame, where is the price running to? If there's a daily time frame imbalance, you know that price is likely running for that. If you watch the weekly webinar, you can see everything I said in that webinar last week. Everything I see where price is likely running to on Nasdaq and some other pairs, they're just plain off. I'm not saying I'm the best. No, don't take me wrong. Don't get me wrong, please. I'm not saying I'm the best. I'm just telling you that I've put in days and nights studying this price, reading price. I'm reading price action, trading it, not claiming to be the best. Oh. Okay, so another thing we want to check for is check if there are MIMB. I've not really thought about this yet. I think it should be in a coming lectures. Manipulation imbalance. It's a kind of imbalance. I don't know for other pairs, but for Nasdaq, this is what happens. You know that accumulation, manipulation, and distribution fees. When price is taking out a possible sell side liquidity or buy side liquidity, or a previous week high or a previous week low, and you know you can also pick swing trading from there. Okay, but we are intraday, so we just pick short term trades because anything can happen at the moment. And when price is leaving, let's say it takes out the previous week high or the previous week low on Monday. As price is heading for the opposite, that's for the distribution phase, on the next day, price leaves an imbalance unfilled. That's that imbalance I call the manipulation imbalance. You will not see this anywhere. Price leaves that imbalance unfilled. I know you might not get what I'm trying to say. That I'm going to put the next topic. That is our daily AMD. It's just going to be fraction of these things I'm saying here. So daily AMD, we talked about the weekly AMD. We're going to talk about daily AMD, right? So another thing you want to check for is check for protected highs and lows. If they are, outline it. You might not be familiar with protected highs and lows. It's another kind of thing I kind of bring it to my own strategy. Like this is I know what is a protected high. I know what is a protected low. What makes a high protected? What makes a low protected? If you don't understand this particular thing, tune in. Just make sure you turn on the notification button because I'm going to be making a video for this particular topic I'm outlining here, right? Daily AMD, and I'm going to talk about all these things. The manipulation imbalance, I'm going to show you when it occurs and how it occurs. And the protected highs, what makes a high protected. Now another thing you should check for is unprotected highs or lows on the previous days. First, you check for protected highs and lows on the previous days, right? If they are, outline it. Either previous days or previous day most especially because it's kind of weekly basis. So if you're on Wednesday, you want to check if Tuesday had a protected high or low. If it had, outline it. Then you want to check also if Tuesday had an unprotected highs or low. Sometimes Monday might be among, but it just depends on your weekly AMD. When I teach daily AMD, you're going to understand these things for sure. So check for unprotected highs or lows on the previous days. These are the things that act as magnets to price. You get my point? If you understand all these things, you're going to solve. You're solving the puzzle gradually. These things act as magnets to price. Prices are magneted to these areas. Another thing to check for is previous day FVG. That's fair value gap using the 1 hour time frame or 50-minute time frame. So you see the 4 things I'm outlining to check. Check for manipulation imbalance. If you don't understand that, turn on notifications for next lecture. Check for protected highs and lows. If they are, outline it, of the previous days. Check for unprotected highs or lows on the previous days. Those unprotected highs, price will likely attack them. Those protected highs is just telling you that price don't have any reason to go back there. You know, the weekly MD price must manipulate, give a fake move before going to the main direction. It's the same thing for the daily time frame or for the daily, right? The same thing indeed for the weekly, the same thing it is doing for the daily. Price will give a fake move before going to the actual direction. So what's that fake move? Where is it attacking? It's magnetic to somewhere to fuel price. Like I said before, liquidities are fuel to price. So if price is not heading for a particular highs, it's going to head for a particular FVG, a higher time frame FVG. That's using the 1 hour or 15-minute time frame. As an intraday, using the 1 hour or 15-minute time frame to mark out the previous day FVG. If you see it, that's where price is drawing to. That's the draw on liquidity. If there are unprotected highs, that's the draw on liquidity. But if there are protected highs and there's no FVG at all, then price don't have any reason to go back there. This is pure narrative. This is not structure. This is narrative. Okay. Let's go in. Now, understand these things. Don't counter trend on the weekly distribution phase. Don't do this. This is a narrative. Don't do it. You can counter trend when price is on the manipulation phase. You know what I mean by manipulation phase, distribution phase, and accumulation phase. If you don't understand, I'm still telling you, please pause this video, go back and watch the weekly AMD so you understand. So when price have done the accumulation towards Friday and Sunday, and it's now manipulating towards within Monday to Wednesday on the distribution phase, which is very, very volatile. The distribution phase, please don't counter trend. Counter trend might work on other days, but on the distribution phase, don't counter trend. New York, London session, don't counter trend. Most people trade structures, and your structure could be on a counter trend. You are seeing your clear structure. Yes, this is a clear structure, but that structure could be on a counter trend. But you don't understand the narrative price is doing, and you counter that trend before you know being taken out. So that thing is, price is most likely to head for a previous day high, previous day low, or previous day higher time frame FVG. Write that down. These are the things you need to check for. Like I said, check for previous day unprotected highs and protected highs, unprotected lows and protected lows. Higher time frame FVG using the 1 hour time frame or 15-minute time frame. Price is most likely to head for the previous day FVG, the previous day high. That's if you understand your weekly bias. Your weekly bias, your weekly MD is like, okay, fine, this is a distribution phase. You know, price manipulated to the high, take out the buy side liquidity, and is now distributing to the downside. So the rest of the week is going to be what? Bearish, just like what this week is doing. I think this week, April 6, just like what this week is doing on Nasdaq. You can see price accumulated on Friday towards Sunday, manipulated to the high, to taking out a daily time frame buy side liquidity, very old buy side liquidity of last year. After taking that down, we have daily FVGs below for price to take that, and that price is not bearish. People think price is bearish, but price is just coming for those daily FVG to fill the price back up. So this just happens to match. You match all these puzzles together, you understand the narrative, right? So when that occurred on Tuesday, and this is NFP week. So NFP week, ICT made it clear that we don't trade on Thursday and Friday, because all these things you are doing here can be rubbish on Thursday and Friday, which might not work, and you just it's a chance for you to lose money. Okay, so we don't trade on NFP with Thursday and Friday, so that's just it. But what you want to check on, what I saw was on Tuesday, price completed the manipulation phase. I started distributing to the downside. So what I did on Wednesday was just I came there and I was looking for, I opened my chart and I was looking for a previous day FVG or high. So when I saw that there was no unprotected high, because all those unprotected high, price we want to attack them. So I said, okay, fine, there's no unprotected high, and fine, there is no MIMB, and that's manipulation imbalance, and fine, there is no higher time frame FVG. So I clearly understood that price is not going back to the previous day, and I'm very safe to pick a short a sell my order from there. And that's what happened yesterday. Over 200 pips, but I was able to catch only 75 because there was a lot of high impact news that Wednesday. So I took my profit before the first high impact news on the New York session. Now remember, there are large range days where price doesn't interact with the previous day price action. Understand this fact. There are large range days where price doesn't interact with the previous day price action. That's those days are just mostly straight. Like I said on the weekly webinar, they are straight. Like price don't even go for the previous day. It doesn't, like, it's not up and down. It's just straight. They are large range days. So I'm going on the daily AMD. I'm going to teach you why those large range days occur. Right? Those large range days mostly, like I said, mostly occur on the distribution phase. Understand that? Okay. So this is for the last week, right? Example of large ranges. This is 2 large range days. Price did not interact with the previous day price action. You can see the first day, price opened here. This is the opening price, and at this point, price opened, closed here. So this is the first day. This is the previous day. Price just kept going one direction, did not interact with the previous day price action. You opened the second day, and price did the same thing. This mostly occur on the distribution phase, and this time unexperienced traders don't know how to trade this thing. Like I said, don't counter trade on the distribution phase. So imagine if you had a setup, right, on this kind of, and this is a distribution phase. Imagine if you had a setup or your structure, whatever, or let's say your coach or blah blah blah, all those things. Oh, sorry. Okay, fine, I got you. Okay, imagine you had a clear structure. Those people that trade structure, let's say you have a demand to the left side and price just mitigated your demand, or sorry, your supply, and you're looking for to short or sell this market, you will likely be taken out. That is just the narrative. Or some people want to mark this zone as a coach, you know, those SMC terms, that's change of character or break of structure, and they want to mark this place as their supply to short the market. So if you are entering trend on this distribution phase, you likely get stopped out. On the distribution phase, you want to do what? You want to follow the trend, right? You want to follow the trend. And when I teach about daily AMD, I'm going to tell you how to pick trades on this kind of days. When you see days like that, and what happens, because most of these days, I know that these days are going to be like this. I know that these days are going to be like, if you look at the second day, what do you see here? All these zones, all of these zones on the higher time frame, this 5-minute time frame, right? So from this closing to this open, this opening to this closing, all of these zones, do you see any imbalance there, any inefficiency there? No. If there are any inefficiency there, price will come back for it before going on this new day. It will surely come back for it. And do you see any unprotected highs there? No. Oh, sorry, unprotected lows. No, they are not. There's no unprotected lows there. This low, you might be thinking, yeah, this low is unprotected, or this low. All these lows are protected. I'm not going to tell you why, but tune in for the next lecture when I talk about daily AMD. So when you open for the next day, you just simply get your narrative that, okay, price is not coming for this new day. What is it you want to do here? What is it that you're looking for here on this second day? You want to look for AMD within that day. The same thing that happened here. AMD within that day. See what happened. And this day, when I was on Twitter that day, because I'm like I said, please don't take me wrong. I'm not saying I'm the best. Before you judge me wrong, I'm not saying I'm the best. I'm begging you, please. See what happened on Twitter. Most of these ICT folks that write threads and all of those guys, most of them that trade time theory. So when I was on Twitter, ICT is kind of, the ICT community is like a community itself. When ICT is tweeting all of this, it's like a community itself. So just going about reading comment section, reading seeing a lot of chat and all of those things. So I saw some guys. This particular place. Look at my mouse. Just identify my mouse. This particular place, that zone, was exactly 9:30. And 9:30, that's when we wait for the Judas swing. That 9:30, wait for the Judas swing. Equities open. 9:30 is mostly equities open, so wait for Judas swing. And that 9:30, price rallied. It's a distribution phase, right? Price rallied to what? To taking out a buy side liquidity on the left side. There's a buy side liquidity on the left side. Sorry, this chart is not this chart information is not really wide enough, but on the daily MD, I think I'll refer back to these things. So price rallied. They are waiting for the Judas swing. Price rallied and gave a simple entry module. Most ICT folks knows it as OTE, optimum trade entry, right? He gave the optimum trade entry there, right there. People started shorting the market. They started shorting the market, and you're selling the market. I was reading lots of things on Twitter that day, and I was like, why? At some point, I was kind of doubting my strategy, because these are the things that happens when you give focus to social media. All those guys you look up to, all of those guys that write a lot of threads, ICT folks that have ICT logos on their PFP, their profile pictures, and those guys, you feel that those guys know more than you. At that point, you don't trust your strategy and all of those things, So I was, since from the beginning of the day, when the day opened, I was looking for bullish, a buy model. And when these days happen, like I said, you look for AMD within that day. It's AMD. I'm not saying it's going to go for the previous day. I mean AMD within that particular day. Inside this day, there's an AMD there. it's shocking, but I'm going to talk about that on the next video. So I did not trade that day because most of these guys I assumed higher than me were selling at that point. And when they were selling, they were just posting a lot of charts and all of those things, adding threats at that moment. Within that 1 hour, that's 9 to 10, that 9:30 to 10:30, price rallied, gave that Judas swing there, and they short. And this is what I mostly say about this. I was affected, and I mostly tell people this is: trust your analysis, trust your strategy, no matter what. I did not use it. I was affected to a point that I could not press any button. Not that I followed them. That's one of the mistakes you guys do. You don't trust your strategy and you follow people you look up to. So because I was having doubts, because I was looking for buys and they're looking for sells, so I was like, okay, fine. I'm not clear about my decision right now. I was affected. I couldn't trade that day, and I missed a lot of trades. I missed a lot of profit because exactly what I wanted to see was price dropping into some blah blah blah. I'm going to talk that in the next video. I don't want to reveal everything there, and it did exactly the same thing. And I was so messed up that day. I just left Twitter and I unfollowed most of those people. I don't know, like that day I just unfollowed many people. I was just so annoyed. Because most of these people that claims sometimes your strategy might just be better off. And that's it. I'm not saying I'm the best. Right? I definitely knew why price was not going back for this previous day. Just a simple strategy. ICT teaches these things, but not in this way. But it gave me that footprint as to what to look for. That AMD, that's everything for me. That's power of 3. It's everything for me. Because that's what price does. Every single day, every single week, every single month. But sometimes it changes the way it does it, and that's why you need constant study. Okay, let's go. Okay, so things you should not do on any new day. If you're opening to trade on any new day, these are the things you should not do. Now, don't sell below a higher time frame imbalance. Please don't. Like I just finished explaining there. Don't sell below a higher time frame imbalance. You have an imbalance on above, right? And you have a very nice, for those of you that trade structure, let's say the OT or whatever, you have the OT or the coach or whatever below that higher time frame imbalance. Don't sell. Price, all these imbalances, all these higher time frame imbalance, they act as magnet, except it's a manipulation imbalance, which I'm going to teach about in the next video. I'm not going to explain it here. So you don't want to sell below that imbalance, because if you sell below that imbalance, you get stopped out. It's for sure you get stopped out. Now another thing you don't want to do is don't sell below an unprotected high. You have a high, a buy side liquidity. That high is not protected, it's unprotected. It's a magnet to price. Price will surely attack it. And if you are selling below it, you know what happens? You get stopped out. Another thing you should not do is just the opposite. Don't buy above a higher time frame balance. You have and higher time frame balance. Like I said, mostly use the 1 hour time frame and the 15-minute time frame to check for these things on the daily. Always calibrate your chart. If you have a higher time frame imbalance below, don't buy above it. Price will always be magneted to that imbalance. And don't buy above an unprotected low. Just the same thing all over again. All of these things are magnets to price, like I said earlier. Price are drawn to those levels, just like the NWOG, that's new week opening gap, and the NDOG, that's new day opening gap. I'm going to teach about these things also, or you can go and search it on ICT channel if you can't wait for this lecture to drop. NWOG, how does it work and how do you use it? How do you use it in daily price reading? Go and read it on ICT's YouTube channel. Now understand that price reacts to highs, lows, and imbalance. You just need to know the narrative. That's it. Not structures. Not structures. Your structure might give you a clear structure. You might see your clear structure on the counter trend or on a wrong day, and you take it. To understand that price reacts to highs, lows, and imbalance. Very simple. Unprotected highs, unprotected lows, and imbalance. Price reacts to it. You just need to know the narrative. Well, so 5-minute time frame. Look at this. Bullish momentum on the weekly distribution phase. Price reacting to a previous day FVG. Okay, so now look at this image clearly. This is the previous day, and this is the current day. So we had a bullish momentum on the distribution phase, on the weekly distribution phase, not the manipulation phase. This is the distribution phase, and we had a protected low here. Yet it's equal. You can say it's equal. Yes, most people are going to doubt that it's unprotected. It's unprotected. It's protected. I know why I'm saying that. I'm going to talk about that on the next video. It's equal, yeah, or relatively equal, anyhow, but it's protected to me. This is a 5-minute time frame, but I outlined my 1 hour time frame. I went to my 1 hour time frame and look for any FVG on the previous day, and I outlined it there. So price opened on the new day and traded back to that 1 hour time frame, and it reacted to it and push for further. As it's pushing further, where is it likely heading to? To another buy side liquidity. So your target, everything, all your loads should be dropped at that buy side liquidity. Price might likely keep pushing higher. Yes, you miss your profit, or price might likely keep might likely return, but you fulfill your own purpose, picking your trade from this 1 hour FVG to the next possible draw liquidity. So this is exactly what I'm trying to explain here. This is the AMD. So this is the AMD of this day. Price opened at this point, manipulated to where to react to this 1 hour FVG before distributing. So this is the distribution phase of this day. Whatever price time and price theory is telling you, you don't need to counter this trend. You don't want to counter this trend. Trust me. Okay, so 5 minutes time frame, bullish momentum on the weekly distribution phase. Price reacting to a previous day low. So we've seen price reacting to a previous day FVG. Now we are seeing price reacting to a previous day low. So this is another week. Bullish momentum. This is a previous day. This low is very much unprotected. Very unprotected. I'm going to talk about that later. So I'm not trying to make you stick to my, because that was is roaming on your head now. I can't make all of these videos at once. So bear with me, alright? So we had this sell side liquidity of the previous day, and this is the current day. What does price do? Price opened here for the new day. That's the opening price there. You can draw horizontal line there. Then it manipulates to take out this low just to what? Just to fill the market. Sometimes this manipulation might happen before that New York Q zone. That's 9:30 equities open. 8:30 or 9:30, whichever you use. Or after or at that 9:30 Q zone. You just want to do what? You just want to pick a trade that's going to the direction, and that's the narrative. So most of these guys that don't understand these narratives, they go about looking at the price theory. They don't want to know anything that happened on the previous day or the previous week or anything that's happening on the week. They just want to do that fake. They just want to wait for that fake move, then pick it. And sometimes it works like that, because if you check this time here, this was 9:30. This dropping into this, taking into this low was exactly 9:30. Price open at 9:30, taking this low. And with your time and price theory, it's what is going to go opposite. Yes, but you don't understand what it's actually doing. What is it? A distribution phase? You're not getting the narrative. Hope you understand. Because sometimes price will likely go opposite, and that's what have been happening this week, this NFP week. Price will manipulate opposite. Like, it's supposed to be a bullish momentum, right? But instead, price will take out a high first, and you think price is going to sell. When it takes out a high, it comes back and take the potential sell side liquidity or previous day FVG before actually taking out your stop loss. And they go about tweeting on Twitter, ICT teachings is a scam, and this ICT doesn't work, and this, that, it talks too much and all of that. You're not understanding it. You're not learning. You don't have to learn. To please and please, brethren. As much as I love doing this, I just love teaching. I just want to bring clarity to the things I do. Alright. So if you find this video insightful, if you learn something new, please like, subscribe, and share the video. I'll keep dropping more content like this, very, very educative content. Okay. So until next time, be safe.